Bitcoin is trading higher again, breaking just over $100,000 a coin once again after the recent volatility we've had this week in the market. You might be thinking, is this a bull trap? Are we going to be bouncing up here back to previous highs only to come capitulating down even worse than where we were before? I don't think so, to spoil that. But we'll take a look at the data, at the charts to see what the picture is actually telling us. You can see here, again, we've drawn this trend line on a couple of days ago. You can see that we honored the trend line really well. We've tested it a couple of different times now with those different flushes in the market, and we have bounced up higher. You can see right now we are almost at a daily high here at $101,000 per coin. We are really rocketing up quite strongly off this trend line, which is incredibly encouraging to see. You can see we're almost actually at an all-time high for a daily close. If we do end up closing over $101,000 per coin today, I would very much expect this trend to continue, perhaps even to come up and test this upper trend line as well. What actually happened over the last couple of days? Well, if we take a look actually at the charts, so we're going to use Velo for this, taking a look in at the funding heat map, you can see that over the course of the last month, the crypto markets have been more and more increasingly over leveraged. You can see that we're getting quite hot here through to the start of December. You can see that the real increase in leverage happened as Bitcoin broke through $100,000 per coin. People were maybe thinking that this psychological barrier, now that it was broken and we were over $100,000 a coin, that it would just be clear skies from there, a guaranteed safe bet that it would just continue rocketing up. And as we all know, in the cryptocurrency markets, there is no such thing as a sure bet. One thing that is for sure, though, is that leverage does not last long, especially whenever people get greedy. We do end up seeing these regular flushes in the market. And you can see that's exactly what has happened on the 9th of December. So that was Monday this week. You can see that the leverage, the heat in the market was all flushed out. We have now got a bit more stability, a bit more breathing space, a bit more room to run again, because the leverage has been taken to a more normal, sustainable level. This is just with large cap coins as well. If you see with mid cap coins and small cap coins, it actually got even more over leveraged. You can see with different coins here, like Caspa, you know, huge leverage made on these plays, and yeah, people were just clearly getting far too greedy, trying to hedge their bets and go all in on these coins now that the all-time highs were being tested and being broken. Psychological barriers were no longer there anymore. We've all been humbled a little bit over the last couple of days. It's been an incredibly volatile period. You can see here as well on the small cap market that the flush has happened. We're back to more sustainable levels of funding in the market. I'm confident, I'm hopeful that we will be able to see a bit more of a sustained next leg up in the market from here. You can see as well that because that leverage is flushed out of the market and we return to a little bit more of stability, there's a little bit less greed in the market, that as soon as some positive news comes out, as we called today, a couple of days ago on Monday, I called that with the core inflation rate came out as expected, as forecasted at 3.3, that or less. So if it came out as expected or less, that we would see a push in the markets. Again, we're just given a little bit more certainty that the Federal Reserve is going to cut interest rates in the United States again next week. Just continuing that trend of decreasing rates month over month at the moment. Again, nothing is a sure bet. However, to take a little bit of a look at what the markets are expecting, you can see here that I believe the forecast was 85% that there would be a 25 basis point cut or a 20.25% cut in the interest rate on Monday, whenever we last looked at it. However, you can see that after the core inflation rate data was released today, we've actually shot up to nearly 95% certainty that that's going to happen. And that's also validated by taking a look over here at Polymarket. They've got a 25 basis points decrease, also at 94% likelihood to happen. Polymarket, again, has been a really reliable source of information I've found over the last couple of months. So I do take a lot of comfort, a lot of reassurance in this and the confluence of these different data points. So the next interest rate decision is on the 18th of December. So all eyes are peeled until that big economic catalyst. hopefully we'll get a nice run up into Christmas as a nice early Christmas present for everybody. Taking another look as well at the Bitcoin Fear and Greed Index, again as called. I'm just trying to bring receipts here, trying to show you that what these are all things that we've discussed on this channel before. We're going and back testing them and having a look and verifying the information that's been shared. I want to make sure that the information is always accurate, is always tested, is always considered, and that we're not just trying to be hype boys here. We have seen a pullback in the Bitcoin Fear and Greed Index. You can see that we were in extreme greed, and again, as expected, with the flushes in the market, we have returned back to just the normal greed. That is that to be expected. We are in the midst of a bull market. There'll always be an air of greed in the market during these periods of sustained upward movement in the markets. So, but the fact that it's come back down to around 74 from even being up in the 80s at one stage over the last couple of weeks, again, it just gives us a little bit more breathing space. We're not as greedy as a market, so therefore there should hopefully be more room to move up over the next couple of days. You can see by taking a look here at the others chart, so again, the total crypto market cap excluding the top 10 projects, you can see here that we have bounced out of this price action zone quite strongly. You can see that we came down and we really did test it a couple of times here. This is again where price has previously reacted quite a lot. You can see at the previous peak back in March, this is where we got rejected off of. It's also had a couple of other really big price movements around this range before. Now we've come back, we've tested it, it has turned into a level of support, I believe. So we've now found a bit of a floor, and we can again continue to make that push higher up towards this all-time high at around $493 billion market cap for the others cryptocurrencies. This is again really encouraging. The RSI has come down, it's cooled off out of this extremely high overbought region. So we are at a bit more of a normal level on the RSI to again continue that upward trend again. We'll be looking for a break of this all-time or this recent high in the trend, and before testing back up to all-time highs with the market cap. From that point onwards, we can be expecting quite, well, we're into price discovery from that point. Nobody really knows what we're going to be seeing from that stage. However, we could do, hadn't planned to do this, but we're going to do a quick Fibonacci retracement just to see where we could be potentially heading next. So if we pull up the trend-based Fibonacci extension, start with the previous low to the previous high to the pullback, you can see that we might be heading up to somewhere in the region of $750 billion market cap if we reach the 1.618, which is kind of a regular Fibonacci extension that we would typically expect in the markets. We could be going all the way up to $1 trillion, which would be a bit of a push, I think. However, would be the next level of resistance from that point, which would be quite common. So these are just forecasts, some numbers that we can work off of based off of the Fibonacci retracements, which has been proven to be a reliable indicator in the past. However, indicators of the past are not predictors of future performance. Cryptocurrency is speculative. It's never certain. This again is not financial advice. Just to get my disclaimer in, everything is just my opinion. You'll do your own research. You'll conduct your own analysis. You'll solicit your own financial advice. But I'm hopeful. I'm excited about this recent flush out in the market, and looking forward to this continued trend higher, all being well. We're going to take a look back at crypto bubbles again. When we looked the other day, this was a sea of red. This was different coins. Most coins were down 20% or so. You can see that we're getting a nice bounce back again already. Today, in the top 100 coins, you can see a sea of green as far as the eye can see. In fact, I don't think there's a single red bubble in the whole top 100, which is just fantastic. So again, as I mentioned, the stock market or the crypto market is one of the only place in town where whenever there's a sale on, people aren't rushing to buy. These projects were down 20% on sale versus where they are today for some of them. So whenever we see these sort of flushes, these liquidation cascades in the market, they do show that they are good opportunities to buy, good entry levels. So yeah, well done to anybody who took the plunge, was brave enough to buy the dip over the last couple of days. You're now reaping your rewards and are seeing some nice healthy returns already in the market, which is fantastic to see. So all eyes are peeled over the next day or so. We'll look for a close higher than the previous all-time high close before a continued trend up to this resistance level at the upper end of this trend line. That is my expectation. I'm hopeful. I will be hodling all the way, and yeah, I'm also taking a look at the rest of my portfolio. You can see here on the right hand side, a nice sea of green, pretty much for the most part across the board. I might do a video on some of these that I have positions in myself in a video sometime soon. One last thing as well that would be good to touch on is that you can see that we are in a really key range here actually with Bitcoin dominance. So we have moved out of this price action zone where we've had a lot of, again, price reactions in the past. We came back up and we almost tested the 50-day EMA, exponential moving average, and we are kind of bouncing back around off of it. You can see that we're now being compressed in this range between this level of support for Bitcoin dominance and the 50 EMA. It'll be interesting to see which way we break. Again, the fact that Bitcoin dominance has gone up, it just gives the altcoin market a little bit more room to run as it continues to drop over time. We are firmly, actually, want to check in an altcoin season. You can see that we are not quite actually in an altcoin season. We have dropped down slightly out of it, but you can see that we have just turned around a corner and we are trending ever so slightly back up again. So hopefully we can come back up to this 75 level very soon. This is definitely a key chart to keep an eye on, and you can see how this kind of works inverse to the Bitcoin dominance chart. Now that we are sort of tailing back down again this way, hopefully we'll see a continuation of a decrease in the Bitcoin dominance chart and an increase in our altcoin positions. That's it for today. If you've learned anything, please do give me a like. If you would love to, I would love you to subscribe if you have got any values from this so far, as I continue to build and develop this channel. If you've learned anything, let me know in the comments. If you've got any questions, if you want me to cover any different topics in particular, would love your engagement, would love your input. But for now, thank you so much for watching. Happy hodling.